As far as the dominant price volume relationships today, let me just pull up the spiders again, and we're going to look at the daily chart. You can see today the volume was huge, and we have in almost all the indexes, we have this kind of a candle, which is called a bullish engulfing candle. Basically, we have our open here and our close up here, and it basically swallows the entire day before that. This is a very powerful reversal signal. So reversal would mean here's our downtrend, and maybe we're going to get an upside reversal here, which is something I'd mentioned yesterday, even though this market has got all kinds of worries and is really falling apart. But the dominant price volume relationships, real quick, for all New York Stock Exchange stocks: close up, volume up 2,555 versus close down and volume up 2,323. On the S&P, or the spiders, close up and volume up 270 stocks, close down and volume up 138 stocks. That price volume relationship is very bullish, meaning, again, we could see, and we probably will see, some further upside. In the Russell 3000 stocks, 1,780 of them had close up, volume up, which is a bullish relationship, and the close down, volume up relationship was 616, so nearly 3 to 1. So a very, very bullish price volume relationship going on today in the market. So I think we could see some further upside. At 251, I mentioned I was looking at AIG, which has been, the epicenter of a lot of what's been going on, and I'm going to roll this chart back so we can see somewhere around 230 in here. I said, look at this. We have a positive divergence. The last thing I expected to see in a stock that's in so much trouble. This 3C indicator is making new highs. That's a leading positive divergence. It's the most powerful divergence you can get. Really, this should be the highest point of 3C, for the day. And instead, when price is much lower, we get this really leading positive divergence. So that also was telling us that something was going on in the market. And basically what was going on was the thought that AIG was going to get some kind of a deal worked out. In after hours, we had Morgan Stanley. Let me pull up Morgan Stanley real quick. Report their earnings. And I just got to catch up to where we are. Morgan Stanley down almost 11% on the day. Now, Morgan Stanley had an upside surprise, which is kind of rare for a financial company at this point. Their earnings per share were $1.32, which is 54 cents better than the consensus estimate. So we're not talking about a penny better or 2 pennies better. 54 cents better is a huge blowout earnings report from Morgan Stanley. Revenues were up year over year. Better than consensus, and one of the most important things, Morgan Stanley maintains a healthy amount of liquidity, which is a big concern for the market with these brokers. AIG, in after hours, the market was up. Let me see, actually, let me pull up the Qs, and we'll look at a 1-minute chart, and we'll zoom in a little bit. If you just see these two little brackets over here, the little blue brackets at $4.20, that's basically where the bid and the ask is in after hours. After the market closed, it was way up here. Participants just feeling very bullish about what was going to happen tomorrow. It's come down quite a bit since then because there's a report out that AIG may be put under conservatorship of the federal government, which would basically make their shares even more worthless than they already are now. So that's what was happening there. They need $75 to $100 billion of liquidity, and it doesn't seem to be coming from the private sector. So if the government's got to do it, then the government's going to take over AIG or put it under conservatorship. And again, kind of like what happened with Fannie Mae or Freddie Mac, they were put under conservatorship, and you can see what happened to their shares, going from $30 back in May, June, to a whopping 48 cents today. So that's what the market has been concerned about in after hours. In any case, let me pull up the spiders one more time. In any case, I think that we have a very strong possibility of seeing some more upside. If we look at the QQQs, which I had featured in last night's video, and I had showed these big trend lines. Let me back out a little bit on a one-day chart. That triangle. The possibility, in my opinion, is that we may see a move higher, maybe up to 43, 44, and then a move down. If you read the contributors letter, the major market call that I put out September 4th and I just released last night, and you read, you're going to find out there's a lot of reasons that September is a horrible, horrible month for the market, particularly this week because we have triple witching, which is equities expiration for equities contracts, index expiration of index futures. All three create a lot of volatility in the market, and even worse than that, next week is even a worse market period. Octobers tend to end bear markets, so we may see a huge sell-off, a waterfall sell-off. That's one of the things I mentioned in the letter, so it's on the site. Go ahead and read it, and think about if you want to become a contributor and get on this contributors letter. Lots of opportunities to make money. That's it for tonight. My name is Brant from TradeGuild.net.